Hey everyone, Diggy here from ForexHabits.com. Today it is 13 September, it is a Thursday, and we are back with some analysis of my favorite currency pair, Euro-US dollar. Now before I get started with this, I just want to mention in my last analysis that you can find on my YouTube channel, which is youtube.com/user/ForexHabits, I did an analysis of Euro-US dollar on the 3rd of September, where just after the close of the last month, I mentioned on the monthly chart how we would probably go to the moving averages on the monthly chart. And at the time, I mentioned to go long at around 124.80 to target around 130, possibly even as high as 132. Currently, 10 days later, we are trading at 129. At the time when I said that, I think the Euro-US dollar dropped to about 125. So just 20 pips short of that trading recommendation, which would have been a sick entry point. So if you were micromanaging your trades, you could have had a look at it, you could have seen that would have been the low, you could have got long, and you could have rode that out for close to 400 pips. Actually 400 pips exactly at the moment. So now situation's getting a bit different. We're looking at when it is actually going to stop and what other alternatives there are at the moment. So we're looking here at a daily chart of the Euro-US dollar. We have the MACD histogram, we have the RSI, and we have the slow statistics at the moment. So what we're looking at now is we're going to go and we're going to zoom out all the way back to 2010 where we had this low. And look what happened from this low after a multi-month decline where we dropped to about 118.80. We had this massive rally from there, pretty much in one direction, from 118.80 to 133. Now that's close to about 1,500 pips, right? But you can see there were declines on the way, small declines, but the trend in one direction was up. Then we had a big decline, and we had an even further rally all the way up to 142 over the span of the next 6 or 9 months. So the question is here, is this a double bottom, and are we going to follow the same pattern? So we dropped to a low of 120.40, I think it was. And currently we've gone up to 129, just over 129. So that's a good 900 pip rally, but if we're following the 1500 pip rally, then we've got a lot longer to go. And as you can see, I drew these trend lines here. So this was the first trend line under which the Euro-US dollar was, which was difficult to break. It broke through there. Averages started to cross through the upside, and you can see from the moment when it broke through that trend line, it just shot up. It literally went up like 300-400 pips just through breaking that trend line. Now the next resistance is going to be this horizontal resistance here, which we can see at around the 129.90 level. But the next trend line, the less steep trend line, at the moment it's around 133, and I actually don't see why we are not going to reach that. But it's probably not going to be in one direction. We're going to get the same situation here where we're going to pull back. So we're probably going to head to this resistance level somewhere between 129.50 and 129.90, 130. We're going to base here a bit, and we're likely going to drop back to this top, maybe 127.50, maybe a bit lower even. We could possibly drop back to these averages at 125, 126, but after that we will probably head higher. And if this trend line breaks at 133, we are going to head significantly higher over 140, maybe 145. So for now, it's really looking like there is not a danger for the downside. But as you can remember, if you watched my analysis on 3 September where I did the monthly chart, and let me change this to a monthly chart, the danger here for this chart, I'm just going to remove everything, is that what could occur is that we're going to rally back on the monthly chart to as high as these averages, so possibly to 133, 134, somewhere between these averages. It could be the 100 average at 131 or the 50 exponential moving average at 134. But if we rally to there and we continue to rally and we drop back before the close of the month, and the month closes as a reversal candle, then we could continue to crash down. So at the moment, it is looking like we're going to get a bit of resistance, so we're going to pull back, we're going to head higher. Then the question is, are we going to stay higher, and is it going to base and it is going to tank from there? Or is it going to break through those averages to the upside and start a multi-month rally, which is going to last probably into early next year? And that's something that we have to watch out for. But for now, we're not trading that long trend, we're trading the short-term trend here. So I'm looking to go short somewhere around this level. I attempted a small short around here at 129, but I think it will actually go higher to 129.50 to 130. Somewhere there I would attempt a short with a 50 pip stop loss. And we're going to try and ride that decline out to around 128, 127.50, and from there we're going to see again what happens. But I do expect after that decline to head towards over the 130 level, 132, possibly even 134. So that's something to watch out. Be sure to head over to my blog at forexhabits.com, subscribe via email. Be sure to subscribe to this YouTube channel if you haven't done so already, because it will allow you to get these analyses displayed on your homepage when you log into YouTube. It keeps it fast, keep it simple, and you're always up to date with these analyses. I mean, you saw my 3 September analysis. That was a trade recommendation that could have netted you 400 pips. And I mean, if you trade at $10 per pip, that's a nice $4,000 just from a free trading recommendation. So be sure to sign up, tell your friends about it, thumbs up, give us a comment, show what's going on, how you like these videos, and we'll see you next time.